Your balance sheet. You know what that means? Your assets and your liabilities. You know, what assets do you have? What liabilities do you have? Basically, now let's look at what you own versus what you owe. Along with that, you have to have some type of income coming in. So first of all, assets, liability. You have to look at that balance sheet. That's what are you earning versus what are the monies that's going out. Inflow versus outflow. Thing you have to have. So when you're going to the bank, they're going to look at that income, the assets and the liabilities. That's number 2 on that point. But number 3, you got to have an income statement. Yeah, if you have some type of business, you got to show your revenue. You got to show revenue. Not only showing revenue, you got to show expenses for that revenue. So for instance, if you were looking at doing Turo as a business, you have a car note, right? That's an expense. You have gas, that's an expense. You have insurance, that's an expense. But your monthly rentals, say they're $50 a day for a car, times you're renting it 25 times, you have to multiply that. So basically, now that's the revenue that's coming in, okay? Number 1, that's dealing with the bank. The bank needs to see that. All right, the next thing is you got to have income. You have to be showing money. So the bank is going to want to see, basically, like I mentioned, money coming in. How are you making money? Now, you could have a job. You could have a side hustle. Now, you could have streams of income, but the bank is going to want to see. What you need to know is how much money you make a year. So if it's $5,000 a month, you know you make $60,000. They like that number.